Today in the grain market, corn was a little bit easier. The lower volume did push the market to trade a little bit more sideways. It seems like the futures have been lower since the beginning of February, and it's really kind of what was expected. We also had weekly export sales were a little bit lower, so that kind of adds to the market really start to contracting somewhat. So the May option volatility also has come down a couple of percentage points as well. And as the continuing of contracting of the market and slowing it down, that means that most of the option volatility will come down as well. But remember that there's still support under the market. So we didn't have a big sell-off that we thought might have happened. Right now, we're just moving a little bit sideways, and it's just showing there is some strength under there. But we're going to need more news for the market to really find some market direction after that. So the market kind of slowed down here ahead of the weekend. Soybeans were firm. Now, February does remain pretty consolidative as well as pretty much all the grains do. But looking ahead to the November futures, that trend is still, still on the upside. And November option vol for the 25 delta risk reversal has increased for the calls over the puts. That just kind of tells us that they're really expecting just a little bit more trade action as we get later into the year for the crop that's not even in the ground yet. But that just tells you that there's going to be a lot more participation in really all the options across the board. Now, wheat was higher today as well. The weather did slow some grain movement, and we expect that that's going to affect really all the grains across the board. Futures also have been lower for the month of February, but they did recover from the decline that we had after the USDA report. And while we did have a little bit more of a range than the other two grains, the market still looked pretty strong going in. Now, the sales were off a little bit, but the focus now is going to be changing to acreage as we move into next week. The Agriculture Outlook Forum is going to be Thursday and Friday. It's going to be the first time that it's going to be virtual, so that might be something that you want to tune into. I also want to make note that the CME announced that the publication of 11 additional implied volatility benchmarks indexes for the suite of volatility indexes that are called the CVOL. So you can now access 2 years of historical implied volatility data. And the indexes are the sweet crude oil, the natural gas, gold, silver, corn, wheat, the 5-year and the 30-year treasuries. All that combined together with the ones we already have makes 19 CVOL indexes across 5 different asset classes. What that does is adds more to help you manage risk and also gives you more opportunity in the options sector.